Good afternoon and welcome to the Wall Street Crossover Show with Darren Sinden, who's market commentator at Admiral Markets. We were looking for a quiet run into the non-farm payrolls, but it looks like the rug has been pulled from under the equity markets.
Yes, it does, Zach. Yeah, Greece is one of the flies in the ointment, and fighting again in the Ukraine, and obviously the bond markets turmoil probably is the word. I mean, you know, all the gains for 2015 that we saw in major bond markets have pretty much disappeared in the last sort of 24 hours, and people are wondering, perhaps with a fair degree of or sensibly wondering what's actually going on. And I think it's just nervousness, and markets hate uncertainty, and they react to uncertain times.
Isn't it just a little bit of liquid ahead of the non-farms?
Well, I think liquid. Sorry to cut across you. I think liquidity is an issue, and I think regardless of whether it was non-farm payroll week, I think that is why we're seeing such volatility in the markets. I talked about this before, but basically banks no longer are able to or want to put up capital to absorb asset flows, and what happens is liquidity is withdrawn, and the prices move sharply until they find a natural level. There's no smoothing, if you like, from the bank market making process. So it's a fact of modern life, I'm afraid. Well,
let's look at, we'll start off with the first slide, data released over the European session.
Okay, well, I will start almost where we started yesterday, with another one of these delightful house price numbers.
10 different numbers that we have, I think.
Absolutely. Halifax house price index for May this time, month on month, they were down 0.1%, so house price in the UK down 0.1% month on month, according to the Halifax in May. That was against the forecast of a rise of 0.3. So again, it's a contradictory number to the one that we saw yesterday from the Nationwide, and it doesn't.
That was a bit more bullish, I think.
It was. Yes. So we're still none really the wiser about what the real flavour of housing market is, or the housing market in the UK is. Of course, that feeds in nicely to the second item on the slide, which was today's Bank of England rate decision. No great surprise that rates remained unchanged and no further QE. Obviously, people will be digesting any statement and minutes that come from because all these information comes out in one day now, as of today. So plenty of people will be going through that to see what they can glean. In terms of other data, the main figure to my mind was the French unemployment number for Q1 2015 came in at 10.3% against a forecast of 10.4%, slightly better, but still a very depressing number if you're a French unemployed.
Yeah, I think Germany's 4.7%. So
it is, yeah. And
so it's just a totally different kettle of fish there.
Okay.
And then on the political side, or the further afield?
Yeah, well, severe fighting again in the Ukraine. Hopes for a peaceful solution there, I think, probably fading the longer that goes on. Greece, it seems like we're back to square one. The Greeks apparently now proposing a counter offer, having rejected the creditor offer yesterday. That sounds basically to me where we were 2 months ago, so I can't really see what's changed. Some people are saying, though, that they're closer to doing a deal than they ever have been, but that could still be a yawning gulf that needs to be bridged. So I'm sceptical that we'll see a resolution anytime soon.
Okay.